Hello everyone, you are watching Sahab Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Sahab Academy. Now let's go to the video.
Hi everyone, welcome back to the third video of contract costing chapter. Now in this video we are going to solve the second problem of contract costing. But before going into this video, let me just tell you what we have done in the previous two videos of this chapter. See here, in the first video we have discussed the concept and the format of contract account very much in detail. Yeah, see here all these slides, see the format of contract account, and I also told you that there is a big difference between the old syllabus and the new syllabus, right? For the new syllabus student, if you have got profit, you can directly take to costing profit and loss for CA and D students. But for the IPCC, for the BCom, BBA, BAF, all you people, what you guys have to do, you have to take it as two notional profit carried down and then bring it down over here, brought down, and then split that into two costing profit and loss and two WIP reserve. So for that you have to have, to do a bit calculation over here. So that's very important for you to understand. Yeah, and we have discussed all of these content that is there in very much detail. See here regarding material, this slide, see here sale of materials, abnormal loss of material, and then regarding the plan there are two options, either take opening balance and closing balance or just take the depreciation. Yeah, so we have discussed so many things here. Then WIP, work in progress, work certified, work uncertified, right? And then as I said that the difference between the balancing figure, yeah, in the old syllabus and the new syllabus, if there is a loss, then it's same for the old syllabus and the new syllabus. But if there is a profit, it's different for the CA Inter guys and for old syllabus IPCC students, BCom, BBA, BAF, all graduation courses. Yeah, so you have to split that, right? So there is a bit calculation you have to do. See, the calculation is very simple. For the old syllabus students, BCom guys, find degree of completion, use the chart. Yeah, how much amount to be taken to profit and loss, that's very important, right? And then balancing figure would go to WIP reserve. So this is the calculation you have to do. Find the degree of completion. Wherever your degree of completion falls, in whichever category, that formula you have to use, and that much amount you have to transfer to profit and loss, right? And then we also discussed the format of contractee account, balance sheet extract, right? Yeah. And then in the previous video, in the second video of contract costing, we have solved one problem to have a proper understanding. So please make sure you have watched both the previous videos. Yeah, the first conceptual and the format video, and the second this problem one, right? Okay, then let's get back to the third video. Now here we have the question. Let's go through it once. Let's try to understand what is happening over here. So see here, Chetra Limited undertook a contract for the construction of a bridge for 22,50,000. Now what is this amount? This is the contract price, fine, 22,50,000. Okay, on 1st April 2015. Yeah, that's the start of the contract. Yeah, so then they are saying on an arrangement that 90% of value of work done as certified by the architect of the contractee should be paid immediately and remaining 10% be retained until the contract is completed. Now what does that mean? It means that the contractee, our customer will pay us the money, in the year, whatever the work certified is, the work that has been approved by the architect, of that only 90% he will pay us in this year, in any year. He will pay us only 90%, and the remaining 10% is the retention money. He will retain that till the contract is completed. For example, if in a certain year 1 lakh is the work certified, then the contractee will pay us only 90% of that. That means 90,000, isn't it? Into 0.90, 90%, that's equal to 90,000. The remaining 10,000, see here, minus 1 lakh, remaining 10,000, he will retain it with himself and, till the contract is completed. Yeah, when the contract finishes, then he will pay us that retention money. Yeah, it will be agreed in the contract like that. Yeah, what's the retention money, what's the percentage of that and all. Yeah, so that's that. Then they are saying the details relating to the contract are as under. See here, the details are given, the materials, whatever materials they have issued into the contract, put into the contract in the first year, second year, third year, and then the wages they have, the wages expenses they have paid, 2,55,000, 3,45,000, 2,55,000. So 3-year figures are given. So we have to prepare the contract account for this year, this year, this year, like that. Okay. Then what? Direct expenses, indirect expenses, work certified, work uncertified. Fine. So all these figures are given. Then they are given, see, plant issued. In the first year, they have put some plant. They have brought the plant into the contract. And then what will happen? Then they haven't brought any new plant or anything. Yeah. So what will be happening is, see, plant value is also given at the end. The written down value is directly given to you. Yeah. You don't have to calculate the depreciation or anything. It's a simple problem. Yeah. See, plant value at the end, at the end of the first year, at the end of the 2016, it's 24,000. Yeah, and then this will be the opening balance, closing balance, opening balance, closing balance, like that. Okay, so let's solve this problem. Let's try to understand how to solve this. Yeah, so prepare contract account for the 3 years. Let's do that. It's very simple. Yeah, let's do that. Now here we have the solution. Let's try to understand how are we going to prepare the 3 contract accounts. for the year 2016, 2017 and 2018. See, it's very simple. The first we are going to start off with the 2016 one, obviously, yeah. And I hope you already know the format. It's very simple. Whatever you put into the contract will come on the debit side. Whatever you get out of the contract, it will come on the credit side, yeah. On the debit side, you will take all the materials you have put, the expenses you have incurred, and the planned opening balance and all that, yeah. And then here all the incomes and the closing balances, right? See, the income, the work in progress you have made, work certified, work uncertified, and then if you're selling any plant or material, the abnormal loss also will come over here. Why abnormal loss will come on the credit side? Because it's going out, yeah, out of the contract, yeah. The material has been lost, the plant has been lost, it has been damaged, like that, right? Then what? Then the closing balance is material return to store, plant return to store, material at site, and all that. And then you already know the difference between the old and the new syllabus, right? So that's that, yeah. So let's come back. So the first 2016 contract account is over here. See here, it's very simple to prepare. What you have to do, you have to look into the 2016 column, right? So whatever you have put into the contract, take that on the debit side. So materials, wages, direct expenses, indirect expenses, all these are what? Expenses, and whatever you have put into the contract, right? So materials you have put into the contract will come over here, 2,70,000. Direct wages, all the expenses, direct wages, direct expenses, indirect expenses, yeah, take all of them over there, 2,55,000, 10,500, 4,500. Clear? Yes. Then what? Then as you can see over here, we also have to take the plant, right? The opening balance. So the plant issued is 30,000 in the first year, so we have to take that in the 2016 contract account, obviously. So to plant 30,000, yeah, the opening balance. Then what? Then go on to the credit side, and you have to take the closing balances and the work in progress also, right? Now here they haven't said anything about materials at site, yeah, the closing materials, nothing is given, yeah. So the entire these materials has been used in the contract, nothing has been left at the end of the year, yeah. The only thing that has been left at the end of the year is what? Is the plant value at the end. See here, the plant has been left, yeah, obviously it will be left. That's by plant at site 24,000, because it has not been returned to the store, right? So we assume that the plant is at the site itself, so by plant at site, and the written down value is directly given to you. You don't have to calculate the depreciation and deduct from cost, nothing, yeah, it's directly given, 24,000. Clear? Simple. Then what? Then work in progress, by work in progress. Now work certified, work uncertified. Work uncertified is nil because there's nothing work uncertified in the first year, right? But we have, of course, work certified 5,25,000. So take that 5,25,000. So take that in the outer column. Is that clear? Yes. So in the first contract, as you can see, we have incurred a loss, isn't it? See here, the debit side is bigger, yeah, 270. Let me show you that. 270 plus 2,70,000 plus 2,55,000 plus 10,500 plus 4,500 plus 30,000. That's equal to 570. And here, as you can see, 525 plus 24, right? So minus 24,000, yeah, minus 525,000. That's equal to 21,000 balancing figure on the credit side. So if there's a balancing figure on the credit side, what's that? That's your loss. And for the new syllabus and the old syllabus, it's same, yeah. For the new plus the old, it's same. What you have to do, you have to take it on the credit side by costing profit and loss. For the BCom student, IPCC students, CNT students, it's same. If there is a loss, it's same. Directly you have to take it over here by costing profit and loss on contract. Is that clear? Yes. So in the first year, there is no notional profit, nothing, yeah. Okay. For the old and the new syllabus, it's same, right? Then let's move on to the second year. The year ended on 31st/3/2017. So we have the figures. So let's go into the contract. See over here, it's simple. So what you have to do, see here. Now what you have to do is you will have the opening balances over here. As you can see here, the 2 plant at site, 2 work in progress, yeah. You have to take that from the closing balances over here. By plant at site 24,000, by work in progress 5,25,000. That would come on the debit side of the next year, yeah. Here, 2 plant at site 2016, 24,000. 2 work in progress 2016, 5,25,000. Is that clear? Simple, yeah. And then what? And then go back to the question, yeah, this column, right? So what all things you have put now in the 2017 year, you have to take that. The materials which you have put 3,30,000, and then the wages you have incurred, and the direct expenses, indirect expenses, all these items you have to again take as it is, simple, yeah. To material 3,30,000, to direct wages 345, to direct expenses 37,500, to indirect expenses, yeah. So you took all the expenses and materials you have put into the contract, right? All the expenses and everything, but the plant thing, yeah. Now here what has happened, here you haven't brought any new plant, right? No new plant has brought up, yeah. So what you have to do here, just take the closing balance 15,000, yeah. 15,000 is the closing balance, the written down value at the end of the 2017. So what you have to do, buy plant at site 15,000. You have the opening balance here from the previous year, right? And then the closing balance over here. Yeah, so the depreciation will be charged like that. The excess of debit will be the depreciation, isn't it? Yeah. So opening balance, closing balance, right? 15,000. Then what? Work in progress. Now work in progress is given. See here, work certified 16,95,000 and work uncertified is 30,000. Just take that 16,95,000, 30,000, you get 17,25,000. Is that clear? Now in this contract account for the year ending 31st/3/2017, what is happening here? You are getting a profit. Balancing figure is on the debit side. Balancing figure is on the debit side. Then what happens? Immediately there is a difference between the new syllabus and the old syllabus. For the new syllabus student, what you have to do, you have to just take it as to costing profit and loss. To costing profit and loss 4,72,500. Now let's not do the calculation and everything. Yeah, just it's the balancing figure is 4,72,500. Yeah, so for the CA Inter guys, you have to take it directly to costing profit and loss. Simple as that. But for the IPCC, BCom, BBA, all you people, what you have to do, you have to take it as to notional profit carried down. Yeah, and then you have to split that. You all know that, right? 4,72,500. Yeah, carried down for the old syllabus students. Yeah, and then take it over here by notional profit brought down, and then what you have to do, you have to do the calculation. Yeah, you have taken it down 4,72,500. Now you have to split that into costing profit and loss and WIP reserve. Yeah, I'm talking about old syllabus. Yeah, so how much amount to be taken to profit and loss, that you have to calculate, and the remaining, the balancing figure would go to WIP reserve. Is that clear? Yes. So how will you do that calculation? See, the calculation is very simple. What you have to do, see here, you have to find out first the degree of completion. What's the work certified over the contract price into 100, you will get a percentage. Now the work certified, you already know it is how much? 16,95,000. Is it not? 16,95,000. So 16,95,000 over the what? The contract price. What is the contract price in the question? See here, the contract price was 22,50,000. Yeah, so divided by 22,50,000, that gives you something into 100. In terms of percentages, that's equal to 75.333 percentage, right? So that's what I did. See here in the working note 1, degree of completion, work certified over contract price into 100. Yeah, I did that calculation. I got 75.333. Is that clear? Yeah. So now in which category does that percentage fall? It falls in the third category, 2/3 category. So what you have to do, notional profit into 2/3 into cash received over work certified. Is that clear? Then whatever amount you get, that you transfer to the costing profit and loss. Yeah, so see here, amount credited to P&L, notional profit into cash received over work certified into 2/3. So see here, now the cash received is not given directly in the question. Yeah, in the question the cash received is not given anywhere, but they have said 90% would be the cash received in any year. 90% is the cash received in any year. So what you can do is 90 over 100 also you can take. 90 over 100. Yeah, because 100 is the work certified, the 100%, and 90% is the cash received of work certified. So like that also you can take. Or what you can do it conventionally and the long way. That's what you have to calculate. In this year, what's our work certified? Our work certified is 16,95,000. Our work certified is 16,95,000. So of this 90% is cash received. So I will take the 90%. That's equal to 15,25,500. So I can take it like this also, 15,25,500 over work certified. Did you understand this? 90% of 16,95,000 is what? 15,25,500 over work certified. Yeah, over work certified into 2/3, you will get the same figure. Okay, from this or this. This is the easier way. Yeah? If they have said that 90% is the cash received of work certified, then you can directly take 90/100. Yeah, that's the shortcut, right? So 90/100 into 2/3. If you do that into calculator, see here, let's do that. 4,72,500. That's notional profit into what? Into 90 over 100 into 2 divided by 3. That's equal to 2,83,500. Now this figure will go to costing profit and loss. Yeah, see here, it will go to costing profit and loss for the old syllabus I'm talking about, and for the BCom guys. Yeah, and then what you will do, you will subtract it from the notional profit. You will get the balancing figure that would go to WIP reserve. So 283,500 minus 4,72,500, that's equal to 1,89,000. Yeah, 1,89,000, that would go to WIP reserve. Simple as that. It's not tough. It's very, very simple. Yeah, so that's what you have to do. And then what? So you are done with the contract account for the year ending, 31st/2017. Yeah, simple. Everything was given to you. You took the plan, the material, and all these things. Yeah, the balances, and then the closing balance and the WIP also. Now always remember, okay, the closing balances will be transferred to the next year, isn't it? Here the WIP, yeah, that's why I took this question, you know, because it is a, what do you say, the chronology question. Yeah, it's a series. Find the series of contract accounts. So here this plant at side and WIP came over here. So similarly, plant at side and WIP, this one will also come in the next year, in the year of 2018. Yeah, the year ending on 31st/3/2018. So in 31st/3/2018, what will happen? See here, that WIP and the plant at site will come over here. Two plant at site, two WIP, 15,000, 17,25,000. Yeah, 17,25,000. Is that clear? So that's how you have to take that. Okay. And for the old syllabus students, only for the old syllabus, okay, what you will people have to do for the BCom guys, IPCC guys, you also have to transfer this WIP reserve over here also. Only for the BCom and the IPCC students, okay, because for the CA Inter guys, you don't have WIP reserve at all, right? So you will not take this because you will not have this part. Yeah, your game is finished till here only for the CA Inter guys. Yeah, but for the IPCC and the BCom people, what you have to do, you have to take the WIP reserve over here, right? 1,89,000, 1,89,000, right? Because these are the closing balances, closing balance, closing balance, closing balance. That will be the opening balance, and the opening balance. Or one more thing you can do for the old syllabus for the BCom guys, WIP reserve, you can also net it off. Yeah, take it as negative over here. Yeah, 17,25,000 minus 1,89,000. That way also will work. Yeah, but like this, it's a good presentation. Yeah, WIP reserve over here and then over here. This is a good presentation. Fine. Yeah. Then what? Then go back to the question. Yeah, 2018 column. What do you have? Whatever materials you have put, it's the same thing. Wages you have incurred, direct expenses, indirect expenses, you have to take that. 189, 255, 13,500. Yeah, so see here, 189 material you have put, the expenses you have incurred, direct wages, direct expenses will come over there, right? And then what? And then the closing balance of the plant. See, the closing balance at the end is given 6,000. Yeah, so you have to take that by plant at site 6,000. That's all. Yeah, then what do you have? Then what will happen? This is the last year. In this year the contract finishes. So in this year, the entire money, the entire revenue will be recognized. All the money will be received from the contractee. Yeah. So what we have to do, what we do usually, you know, see here, let me show you the format of the contractee account. In the contractee account, what do we do? Whatever money we receive part by part, we take it as what? Cash account debit to contractee account. Yeah. We have received the money from the contractee. Yeah. First year, second year, third year, like that. And then at the end of the year, yeah, see here, by cash, then what we do? We carry that balance forward. Yeah, in the first year we have received 90% of work certified, carry that forward, balance B by D. Again in the second year we have received 90% of work certified. Yeah, the cash receipt I'm talking about, and then carry that forward, yeah, by balance B by D. And then in the last year again we have received the whole money, everything. Yeah, whatever that is outstanding, everything is received. And then what we do is, whatever the balance was there, the entire balance is transferred to the contract account. Yeah, it is transferred to the contract account. So in the contract account, in the last year, what will happen? It will come on the opposite side by contractee account. See here, contractee account here on the debit side, right? So in the contract account, it will be on the credit side by contractee account, and you have to take the full contract price. Because see here, when you receive the money, you were carrying forward the balances, right? Why is that? Because it's like a liability. Yeah, if you don't do the contract, then what would happen? You might have to return that money. Yeah? It's an advance really. You haven't completed the whole work, the entire work. Still you are receiving money for that contract. Yeah. So what you have to do, you have to recognize that, but you have to keep carrying that forward. Yeah. And then at last you will recognize the whole amount. Yeah. See here, to contract account. Everything, balance B by D, whatever you have received previously, the balance as well as you have received in the last year, both of these things, the entire contract price will be transferred to the contract account. Yeah, so that's why we have to take over here full contract price 22,50,000. See here, 22,50,000. Is that clear? Simple. Yeah, so that's what you have to do. And then what happened? This is the last year, so there is no notional profit, nothing. Yeah, there's nothing. The entire profit immediately you can recognize. Why? Because the contract is over. Yeah. Why in the old syllabus we used to have this notional profit concept? Because the contract is not over, so we cannot recognize the whole profit as our profit. Yeah, that's why we have this calculation and that categories and that calculation and everything. Yeah, so here the contract is over. So for the new syllabus, for the old syllabus, IPCC, BCom, BBA, all you people, what you have to do, simply to costing profit and loss. Let's do that in calculator. See here, credit side, 1,89,6,000, 22,50. 1,89,000 plus 6,000 plus 22,50,000, that's equal to 24,45,000. yeah, so that would come on the both the sides, and then go on subtracting from the debit side. Minus 15,000 minus 17,25,000 minus 1,89,000 minus 2,55,000 minus 13,500, that's equal to 2,47,500. that's your profit that would go to costing profit and loss, and immediately you can recognize entire thing for the old syllabus also. yeah, you don't have to do notional profit and all that crap. yeah, it's simple, right? 247,500. is that clear? So last year contract over, new plus old plus BCom, for everyone it's same. So did you understand the main, the main goal of mine to take this problem was just to, explain you the closing and the opening balances. yeah, how the connection is there between the contract accounts. yeah, the closing balance, the WIP will be taken in the next year like this. yeah, WIP, the closing, the opening, again the closing, the opening, yeah, like that, right? And the WIP reserve also for the BCom, BBA, and what do you say, the IPCC student, what you have to do, WIP reserve also you will have to carry forward. yeah, if here WIP reserve came for the old syllabus, you had to take it over here, but since here there was a loss, and you all know if there is a loss, then for the new plus old plus BCom, for everyone, loss has to be directly taken to the profit and loss, nothing else. yeah, there's no notional loss or anything. yeah, so that's why I took this problem. yeah, for the WIP reserve and all, you have to understand properly. yeah, simple. Did you understand this? Easy, right? So now from the next problem, what we have to do is we have to see, how to calculate this work uncertified and all these things. yeah, we'll see that in the and estimated profit, that is also there, so we have to discuss that. yeah, so this is it. yeah, it's simple problem. yeah, in the next video we'll solve one more problem where we'll discuss and we'll take an advanced problem. yeah, so it's a simple problem, this one. Easy, you understood this? yeah, okay then, bye, see you in the next video. yeah.